Hello and welcome to the PPW pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. My name is Edmund Keith. I'm the editor of onlinemarketplaces.com and I'm joined today by Harvey Hancock. How are you doing, Harvey?
Very good, thank you, Ed.
And Simon Baker. How are you, Simon?
Fantastic Friday afternoon.
Yeah, absolutely.
Beginning of the weekend.
Yeah. So today's episode is all about the news that PropertyGuru, which is a real estate portal operator in Southeast Asia, is going to be acquired, or there is a pending deal to be acquired by EQT Private Capital Asia for $1.1 billion US. This news broke earlier this week, and it comes 2.5 years after PropertyGuru floated on the New York Stock Exchange via a SPAC merger. By the way, it floated at a valuation of $1.8 billion and a share price of $8.6, I believe. And today we're going to talk about how EQT is going to take PropertyGuru and potentially double or triple its value, or swell and sell, as I've seen written today. So before we get into the details of PropertyGuru's business and what EQT can potentially do, Harvey, why don't you give us a few more details about the deal itself?
Yeah, sure. So EQT, for those who aren't aware, as according to my Wikipedia research, is one of the three biggest private equity firms in the world, with assets worth in excess of 227 billion US dollars. So this is a big, serious firm. For those of you who are avid readers of our output, you will know that EQT also sold Idealista earlier this summer. So they have been active recently as well. What's the premium for shareholders? So the offer for 1.1 billion represents, as far as I'm aware, a premium of 52% for shares based on, I think the detail was the last date before the rumors emerged. So basically the last time where how do we describe this, Simon? Where it's the last time the shares were unaffected by impending takeover talks.
Yeah, basically in sort of that March, April timeframe, when prior to speculation on the market that something was going to occur. And of course, once there's speculation, shares tend to run as people want to make money. So it's about a 50 odd % premium on the sort of volume weighted average of shares about that point in time.
Only other main details really are that this has actually been rumored to be in the works in the background for a few months now. We did see a couple of stories come out earlier this year saying that PropertyGuru may be open to a private acquisition. Obviously, that's now become public knowledge, and the deal is expected to close by Q1 2025. PropertyGuru's sort of been tight-lipped about it so far. They've not said much, but I think the firm is probably quite happy with the deal, and I'm sure we'll get into why in the coming moments.
I have a quick question for you, Simon. So I think it was back in May that these rumors started, and I think it was Bloomberg first reported that this might be in the works. Who would have leaked it? Whose interest is it in to leak it? So, because someone obviously leaked it.
It's either leaked, or it's either purposely leaked, or it's just market speculation. I mean, the reality is that when you've got an asset such as PropertyGuru, which has been in the market for a long time, 15 years, if not longer, been operating, and if for whatever reason, it's underperforming, and think about in those days, if you'd listed the company at when you do a de-SPACing process, you actually start at $10. When they went public, actually when the shares listed, they immediately dropped to $8, and then sort of basically went all the way down to $3 something over the intervening period. When assets have sort of become undervalued on the market, there's always going to be speculation that someone's going to buy it. So I'm not surprised that then sort of gained momentum, and it becomes a way in which people speculate. The market sort of has a herd mentality, and will start to move in that direction if they believe there's a deal occurring. And of course, I'm sure they asked of the company, "Is anything happening?" And I'm sure there was a lot of no comments. And no comment is like a nudge and a wink saying yes, things are happening. Because if you say nothing isn't happening, if things are not happening and they are happening, then you've got a problem. So It's usually no comment in that process.
Okay, and really quickly, is this a good deal for shareholders? This seems like a deal which kind of suits everybody?
Well, it depends, right? It depends when you bought your shares. If you think about it, so if you now I can't go back in history far enough to work out when some of the major shareholders acquired their shares, like when REA Group vended in Property Group and such, what their ingoing share price was. We'd have to probably dig that up and try to reverse engineer that, because that was prior to the de-SPACing process. But I would think that if you're someone who bought your shares at around that de-SPACing time and held onto them, so maybe 8, 7, 6, 2.5 years later, you're getting your money back. Yeah, you probably lost a bit of money. I think if you're someone who's been buying shares at $3-4, you're very happy at that outcome, because you've fundamentally doubled your money. But I think the underlying question is, what the deal's done. The price is the price, and I think the other day we were looking at some numbers. When you sort of break down PropertyGuru into its component parts, it's a lot of its revenue generated from Singapore and profitability, EBITDA profit coming from the Singapore market. The question of whether or not it's worth 1.1 million is sort of a moot point, because that's the price that's being paid for it. And I heard it was, I heard the rumor mill has it that it was a competitive process with some other PE firms in there, and one very large Australian-based property portal may have also been bidding.
You told me I wasn't allowed to say that.
Okay, I'm just saying that's what the rumor mill has, right? I just keep my ear to the ground and listen and such. I haven't named names in this process, but that's what the rumor mill says. What I think is interesting in that whole process is that now, having spent 1.1 billion and knowing EQT the way I do, because I've many years ago I did some work with them on Scout 24. Well, we're talking a decade ago, so I can. The statute of limitations has definitely expired. They're a very good organisation, very thorough in their analysis. They are, top notch in what they do. So they've clearly seen a lot of value in the business. But the real underlying question is, well, that's great, but you're not putting $1 billion of funds to work to get 100 million back, 10% return. You're putting $1 billion or 1.1 billion at work to hopefully double the business, if not triple the business. And at the core of what we're talking about now is like, well, how do you do that?
Which we will get onto. Before we get onto that, not everybody listening to this will know exactly what PropertyGuru does and their history. So why don't you give us a quick potted history of PropertyGuru, please, Harvey?
Sure. So Simon's right. It's been around for a while. 2007, the company was founded by a couple of expats. It acquired funding, it grew, and it made quite a lot of acquisitions in new markets. So it expanded to Thailand, Malaysia, Vietnam, Indonesia. It wanted to float in 2019, but was basically stopped for one reason or another. It did manage to get its flotation in 2022 via the SPAC deal that we spoke about briefly before. 2023, things maybe aren't going so well in Indonesia, and PropertyGuru drops out of Indonesia. And it also pulls its fast key service as well. So 2 major divestments, shall we say, in recent years for PropertyGuru. That's a very brief history. I can go into more details if you like, Ed.
No, I think we'll get into the main question of why we wanted to talk about this subject today, which is, the past is in the past. What are EQT going to do what they did with Idealista? So they pretty much doubled their money with Idealista, right? What are they going to do with PropertyGuru? How are they going to grow and exit? As of right now, PropertyGuru has 5 different operating segments. So it's got Singapore, Malaysia, Vietnam, FinTech, and other Asia. And we'll go through them and kind of see where we think Property Guru can grow with the help of EQT. Before we get into it, Simon, I have asked you this before, but I'm going to ask you it again because as an outsider looking in, I'm still kind of unsure why real estate portal companies need private equity firms. Like, to my mind, as a complete novice, this is just, people who are good at looking at spreadsheets being helped by people who are also good at looking at spreadsheets. What is it that, apart from money, that EQT brings, or just any private equity business brings to a real estate portal?
Yes, so EQT is more than just money. They've got a very good network of very smart people that can help do a couple of things. One is help focus the operations of a business, help find the right operators for the business, and help do deals to scale the business, okay, beyond just organic growth. So they're far more than just cash and put the money in and disappear off into the sunset. They're very active investors. They work very closely. I mean, they own all of it now, right? So they've got to, at the end of the day, they want to get a good return, and they've got their hands all over the business. Now it's, well, what are the things that they can do to release value that maybe the historically hasn't been released?
Okay, we will dive straight in with the number one market for Property Guru, number one by a long way, which is Singapore, its home market. Property Guru is very easily the market leading real estate portal operator in Singapore. I think I read it has something like 5 or 6 times the market share. I mean, that's according to Property Guru, so you have to take it with a pinch of salt, but it is definitely the market leader in Singapore. There are big commission dollars to go after in Singapore, and it's done that very well. My question to, I guess, both of you guys is, so I wrote an article about Property Guru in Singapore a few months ago, and it turns out that, I mean, at least by my calculations, Property Guru is currently taking about 11-12% of the entire agent commission pool, which just, it's higher than anywhere else in the world. Not even Rightmove takes that much of the commission pool in its market. Will EQT be looking at Singapore and going, okay, we're just going to up our prices? Because I'm not sure they can.
I think you have to think about releasing value or capturing value and growing a business in a couple of ways. You look at the revenue line, you look at the profit line, the EBITDA line. Right now, if we look at the EBITDA line, you've got to say, well, what's the overall margin for the business, and can they improve that margin while maintaining revenues? Okay, so then you sort of work your way backwards from that, and you then say, well, then you have to believe that you can cut costs or costs that can be removed from the business that historically weren't removed from the business for whatever reason. Now, being delisted, you immediately save $1 million a year because you're not wasting time on all the listing fees and compliance fees, and being on a NASDAQ is a super expensive proposition. Right? So you're going to save a lot of money just by delisting. You're going to add a few percentage points at your EBITDA line. Then you're probably going to become a little bit more streamlined and efficient internally. You don't need as many compliance people. I mean, if you're listed on the NASDAQ, you've got to be SOX compliant. You've got a whole range of internal systems and processes that as a private company, you don't need to invest in. Okay, so maybe you can add a few percentage points at the EBITDA line. That certainly doesn't double your value, by the way. Right? It just starts to incrementally add to it. So you're not going to be able to save your way to doubling value. Okay, and often you get companies that are, for whatever reason, being poorly managed. You take them private, you strip out a lot of costs, you close down businesses that weren't running, and you've suddenly released a lot of value because it was hidden. Maybe they look at that. Maybe they look at their data business, or maybe they look at their fintech business that is a very that I think those business units contribute 2 or 3, 4%.
We'll get to those, but what do you think? What do you think specifically they can do in Singapore?
I think you've got to look at it holistically first, right? You can't just laser in on one market. So I think Singapore, you're going to struggle to you're not going to find another $1 billion worth of value sitting in. Let's assume it. We have to have some assumptions at the top line. You bought it for 1.1 billion. You want to sell it for 2 billion, right? You want to basically double the value. You're not going to be able to do that just in the Singapore market. It's too hard. The market is too small, and you're already clearly the leading player, daylight second, and extracting a lot of value. You're the right move or the realestate.com.au of that market, and you are honestly doing a fantastic job. So what do? Do you cut out costs? You're not going to be able to cut your costs to get to the doubling. You've got other markets because we're good.
Okay. So we'll cross Singapore off for now. Singapore, it will probably continue to grow as it has been growing. They have been increasing the average revenue per agent pretty well in Singapore, but it's not going to be, the ticket to the next level, we're saying, necessarily. Okay, let's talk about the other markets that PropertyGuru is in. So it's in Malaysia, it's in Vietnam, and it's in Thailand. It's not in Indonesia anymore. Let's start with Malaysia. You know the Malaysian market quite well. You've worked with iProperty. What is the Malaysian market like? Are we talking something that's closer to Singapore in terms of what it looks like, or something that's closer to Vietnam?
No, Singapore is unique in the Asian markets. It's very much high price, high high GDP, high property prices, good agent commissions, thus the capacity to be able to pay good marketing dollars. Once you cross the border into Malaysia or into Indonesia, or you start going to other markets, it rapidly decreases in terms of the average house price, the average GDP, and the capacity to extract money out of your agent segment. And when iProperty and PropertyGuru merged back in, was it
2021?
That was a marriage that was long in the making. I remember back in 2011 or 2012, so we're 13 years ago now, 12 years ago. When I was chairman of the iProperty Group, we negotiated heavily with Steve Malouche and the guys at PropertyGuru to merge the businesses, because we could clearly see that scale was going to create a lot of value. We couldn't get the deal done for various reasons, which anyone wants to have a beer, we can have a chat about face to face. But I can't see that you're going to release $1 billion worth of value out of Malaysia in this. You might get a bit more through some sales and marketing efforts, but remember, iProperty is still probably the dominant player in that market, and you can see from their numbers they're not making hundreds of millions of dollars from it. So it's going to be hard to release the value. So then you start getting into the much smaller markets that they operate in.
Yeah, so so it's worth pointing out that Singapore and Malaysia are, at least as of PropertyGuru's Q1 filings, the only two markets that are adjusted EBITDA positive for them.
Yeah, but more importantly, look at the revenue. I think combined their revenues are 80-something%, 80.
Yeah,
about 84%.
It's big. Yeah.
Right. So if you're in EQT's shoes, and we can talk about Indonesia, we can talk about not about Indonesia, Vietnam, and we can talk about Thailand for hours, but you're not going to get to $1 billion, right? I mean, you'd have to have an amazing growth from where you are today in those markets.
And also, it depends not on you as a business, but you are dependent on the market more than anything, right? Because as I understand it, PropertyGuru's earnings in Malaysia recently have been affected by, weak currency issues in Malaysia, and then in Vietnam they've been affected by various different economic headwinds, right? So it's not that this is a bad business; it's you're going up against the tide to an extent, right?
Yes, there'll be microeconomic or macroeconomic factors, but in each of these markets that either push in your direction or push against you. And the other thing about these markets is you never know what's going to happen. I mean, you've had military coups in Myanmar. You've got civil unrest in Bangladesh. You don't know what's going to happen in these markets. You don't have Singapore. You know is going to be stable. It's going to be everything's going to be nice and projected. But as you move sort of further north, you start to get some more unstable markets. So I think if we sort of at this point stop and say, well, if you do a combination of, if you just look at the current business and you say, can I strip out some costs? Well, you're clearly going to get some costs out of not being listed anymore, not having to have as much same level of compliance and systems and processes. So then you're going to have to say, well, can I grow the top line in these markets? And if so, can I do that in a aggressive enough manner that flows through to the bottom line that then can start to justify a 2 billion valuation rather than a 1.1 billion valuation. And remember, that's a 1.1 billion valuation of what they've offered. But prior to the rumours, it was a 600 or 700 million valuation. So you're not really doubling the size of the business. You might have to triple the size of the business from what the market was valuing it prior to the rumours spreading. Okay, so you got a lot of work to do on any valid set of metrics. So
okay, so we're going to, in terms of at least doubling, tripling the business, we're just going to kind of mentally cross out some of these markets. About?
They will contribute.
Of course.
Let's not say it's zero.
Yeah.
You got to say that they will contribute, but they're not. None of them. I can't see any of them being the game changer.
Right. So Malaysia and Vietnam are down right now, comparatively because of factors beyond PropertyGuru's control. Let's say at some point you have to expect that those situations will turn around and it will begin to contribute to a greater extent than it has done in recent quarters.
Yeah, but I can't believe that EQT is putting a whole bunch of eggs in a basket based on macroeconomic environment changes. That would be a very courageous decision, and I just can't believe that. So they've clearly thought through what it's going to take to turn the story around into a much stronger growth story.
Okay, so that kind of leaves two things as far as I'm looking at it that PropertyGuru does at the moment, which could contribute to this big leap in top line revenue, right? So they're into mortgages, they're into mortgage brokerage, but only in Singapore. They're not into it, as far as I can tell, at least, having looked this morning in their other markets. And they're also in the kind of data game. So they have data products that seem to be doing at least fairly well. I hear about them a lot. We have talked extensively about real estate portals getting into mortgages. I think your thoughts on it are pretty clear. I would imagine that if they want to expand the mortgage business, they would have to do some M&A, right? They would have to jump a border with some M&A.
Yeah, I mean, I think I think the way to think about it is not about M&A in mortgage. I would just think, are you going to fill the gap in valuation by mortgages? Probably not. Because if you did, you'd probably be globally unique as a business. And I think that would be a struggle. Even if you bought a great player, well, you got to more than triple your value because you've just invested another, 300 million to buy a business. You've got to get a return on that investment as well. Remember, you've got to whatever you acquire, you've got to acquire it hopefully at a cheap price that within this environment would be automatically upgraded as a multiple, and then you hope that that's going to then grow and contribute even more. I think the question is broader: is can you acquire your way to an even stronger position within the Southeast Asian market? Okay. Now, Singapore, who are you going to acquire? There's no one to acquire because you're already the dominant player.
I mean, I imagine if they tried to, so the other player in Singapore is 99 Group, who recently raised funds. I imagine the Competition Commission in Singapore wouldn't just let that happen because that would,
I don't know.
That would be a bit of a problem.
If I was Darius, who's the CEO, I would be banging on the door saying, "Hey, Mr. EQT, can we have a chat?" Right? Because
there were rumors that 99 Group were going to be bought out by Carousel, who are the major kind of horizontal classifieds player. That didn't end up happening, but
Yes. So I think then you've got to look in some of these other markets to say, can you accelerate your position in these other markets? And then you've got to say, who would EQT be looking at? It'd be, well, who's already got the market in these markets who's got a material position. You don't want to buy something that's small. You got to think about it. The markets you're already in? So Malaysia, Vietnam, Thailand, Singapore. They're the four major markets. You were in Indonesia. Do you go back to Indonesia and have another crack at that, but with a different team? Do you find some other businesses to put into your existing markets in either Vietnam or Malaysia or Thailand? Or do you enter new markets? Do you expand a bit more broadly and try to probably pull in something like the UAE, which looks more like Singapore in that conversation? You're clearly not going to go near Myanmar or Bangladesh at this moment. Maybe Bangladesh is a little bit different at the moment, but certainly Myanmar is problematic. Or do you then start to say, well, do I wrap in something like in something out of India into it? But those are large enough plays that are standalone type acquisitions anyway. So I think there's a lot of questions about how you do it. But if you're them, you've got to look at who are the players in the market that are worth acquiring. So within the search segment, you're looking at the DCGs of the world. If you're then thinking maybe I go into the transaction business a bit more, so you're looking at the Fazwazas of the world and so on, or do you go into more of the ancillary transactions, like the go heavier into mortgages, maybe into the rental space and so on, and then that's where you start to double down. But any which way you cut it, this is not organic growth. This is acquisitive growth, which means that you haven't spent 1.1, you've spent 1.2, 1.3, 1.4 to build your starting point.
Okay, I just want to highlight some figures that PropertyGuru had in their prospectus, which they released, I think, towards the end of 2021. They had Thailand as the highest total addressable market, just in terms of like the property market. Out of all of those markets, they put it down as 580 million US dollars. Thailand's an interesting one because nominally, if we were to just like count real estate portal traffic, PropertyGuru is the number one via DD Property in Thailand. But if you talk to people in Thailand, they say it's not really about portals. It's not really about advertising. It's about something else. It's kind of, just being the number one in terms of traffic doesn't mean that much in Thailand, is what people have told me. To then jump back to what you were just saying there, could you see PropertyGuru getting into the transaction a little bit more in a market like Thailand, so that they need a big leap from somewhere? That could potentially be the big leap. Everybody seems to want to go transactional in Thailand.
Well, they are going transactional. Whether you've got Fazwaz and all part of Lifeall Connect with its dot property portal at the front end. You've got Lazudi, what's doing there. You've got Property Scout. You've got a bunch of players who are each doing interesting things in the market, all fundamentally going after transaction revenue and some advertising revenue, both as a combined model. But none of them are delivering $100 million in revenues. Remember, PropertyGuru does $122 million US dollars in revenue. So you got to say, well, how do I grow that to 200 million? Right? That's sort of you got to start to think of break all these problems down into achievable goals. You can get into the real estate transaction to do it, but you got to do it profitably. Right? That's the challenge. How do I profitably get into that transaction space? So looking at the numbers here, and on an EBITDA margin basis, their EBITDA is roughly 50-odd%. I think PropertyGuru. A lot of it's coming out of Singapore, where you're a large dominant player, so it's sort of swayed in that direction. But if you go into the transaction space and a good operating company there, is probably doing, you might get to 20% EBITDA margin. So it squeezes your overall margins, which means you've got to do a much higher top line to reach the overall EBITDA dollar at the bottom line. And so now the complexity of the maths gets more complex again as you grow these businesses. So I think the most likely outcome is they're going to go keep pushing the button in Singapore, see if they can extract more value. But if your maths is correct and they're currently getting 10+% of an agent's commission already, there's that squeezing lemon from that juice from that lemon is going to be challenging. Then you say, well, can I get more aggressive in doing other things like maybe Malaysia, because Malaysia's not a bad business for them. It's good consistent revenues, but it's maybe a third the size of Singapore in terms of revenues. But the EBITDA margin's good. It's 50+% adjusted EBITDA margin for that business. So can I go heavier there? If so, do I acquire someone? And so on. You literally play each market out like this way, unless there's some. And then I'd say, well, can I acquire an asset that just helps jump forward by a 10, 20, 30 million revenues?
So interestingly, so if we leave aside all of the kind of portal activities for a moment, which I guess we've discussed, one interesting move that PropertyGuru made a few months ago, which I have to admit I don't know that much about, is they started providing data. So they have a data business, which we haven't really spoken about yet. The data business, obviously, it has like one product that's aimed at agents. It's got one product that's aimed at, I think, consumers. And then it's got another kind of branch that's aimed at, anybody like developers or anybody who wants good data, right? And they started providing data for REITs or people who own like a mall or something in Singapore to basically kind of work out footfall or whatever they need to do with data, right? I didn't pay that much attention when it first came out. Is that potentially quite a good business to be in? Is there a lot of money in that? I mean, it's something that CoStar does in the US and they make tons of money from it. Is there enough of a market in that potentially?
My gut feel is not to close the gap, not to suddenly turn the valuation of the business from a 1 billion to 2 billion valuation. You might add 50 million to the valuation, but I'm not knowing a lot about the business, but I would be surprised if you suddenly created a massive business, because PropertyGuru has been sitting on data about the Singaporean market for 20 years, nearly 20 years. Okay, you would have created data tools at the moment that the market would have been demanding, and you would have done some interesting data tools way before now and established that position. You'll make some money out of it, but I'm not convinced that the market's big enough to create a $1 billion data business or $500 million data business. It doesn't feel right. And the US is a very different beast. CoStar has been around 30 years now, longer. If I remember Andy from our Property Portal conference last year in Madrid. So with all of that, from a standing start, that's going to be hard. They'll make some money, but I don't think it's going to be game changing in the outcome.
Okay, I have like kind of a big broad question which I've been meaning to ask you, which I don't think there's necessarily an answer to, but I kind of got thinking about this while doing the research for this. So I definitely drank the Kool-Aid and I thought, PropertyGuru, what a great business. This is when it was going public, and I thought, demographic tailwinds. Whenever anyone says demographic tailwinds, developing market, I go, okay, yeah, that's going to happen. The forces at play here are just too big to resist. Eventually, this company is going to make a ton of money, right? But you've kind of seen it time and again not quite play out the same way. Like I think in India, people have been saying demographic tailwinds for a generation now, and it's not, the businesses there still aren't quite profitable. Are we guilty? I know I am guilty, but are we guilty as an industry of kind of assuming that all markets follow this linear path where eventually all agents will have enough money and will want to pay for a property portal with a basic kind of advertising model? Because, it seems to me that somewhere like Indonesia, where, massive population, obviously not tons of money, but like there should, to my mind, be enough money to make a real estate portal profitable in Indonesia, but it seems that there kind of isn't.
Yeah, so I think there's sort of a few things wrapped up in that statement /question/reflection. Okay, Let's start with the thing that never gets talked about, which is the valuation of a business is a fundamentally different game in public markets compared to the underlying performance of the business. Let me explain. If you had been a shareholder in PropertyGuru from, let's say, you're one of the early investors in 2010, 2011, 2012, you would have had your money in that business for a decade by the time they de-SPAC. Okay? Now, you've had your money in that business for a decade. You just want to convert that to cash. Okay? Because you've invested it a long time ago at whatever valuation, doesn't really matter. It's been sitting there for a long time. So people don't want money in shares that might have another 20% upside. They just want to convert the money to cash. So it just takes 20% of the shareholders to say, I want to convert this to cash, for the share price to tumble. Because they want to do the conversion, and people are going, well, there's 20%, it's called an overhang. Right, I'm just going to wait. So therefore people put a bid. I'll sell my shares at $8, I'll sell it at $7.80, I'll sell it at $7.60, until eventually someone nibbles. Right, so the share price goes until the market clears. So this often happens with companies that have been private for a long time. They list. Once they list, unless the company's done a very good job at securing what's called aftermarket support, which means not only at the listing people are buying shares, but they've agreed they'll buy another $10 million worth of shares on market as soon as it lists, right? So that the people who have been there for a long time can clear out.
Yep.
Share price tumbles. Once it tumbles, it becomes like this, an avalanche, which is why buying shares at listing, unless the company is huge, got big profits, big demand, it's had a lot of press, you more often not get bitten in the ass in this process. So that's a totally different game to what the performance of the company is. Totally different dynamics. In fact, the two are quite distinct from each other. Then the next thing is, how does the company perform versus market expectations? So the company can, if the company says, I'm going to double in size, right, but I only grow by 80%. Well, 80% is a fantastic growth, but the market's disappointed because you didn't double. Because you didn't double, your shares go down, even though you went up 80%. Because the market builds expectations into the share price. So the game on the market is all about the communication of the board, the communication of expectations, what the shareholder register looks like, the overhang, and so on. All that goes into determining the share price. Oh, and the last thing is the performance of the business in that equation. So that's my first thought on that first part of the question. Then the second part, which is sort of it's different again. The having listed and operating in that public market environment, it's a hard game of delivering results, because you're literally on a treadmill. You have to release your results every quarter. You're literally getting graded. It's like going to college, and instead of being graded at the end of the year, you're getting graded every 4 times a year. And by the way, if you fail you're out in the first quarter. And so you're constantly having to march to a different beat of a drum. But sometimes these markets just need a lot of nurturing, a lot of caring. It takes a lot of while. So Indonesia could be a great outcome. But if there's impatience in the business because the market is looking at the shares are trundling around at $3.50, $4, down from the $10 de-SPACing price, you've got a problem. Okay, and you're going to be reminded every day by disgruntled shareholders who, for whatever reason, weren't part of that avalanche, right? Okay, well, wait a second, I had shares, and they're not remembering the price they bought their shares at. I don't know, 7 years ago when it was still a private company. They're remembering the fact that it was worth $10, and that's why things like in Indonesia and so on, they would have pulled out, because they eventually said, look, there's a lot of hard work. This is actually a long road. And the market doesn't have patience with long roads. But private companies such as EQT do have patience with long roads, and they go, no, we're going to invest 10 million. We know we're going to lose 10 million. We'll take our time. So maybe they invest that in the fintech and data business. Maybe they invest that in some of these other markets where they had been losing money, and they go back into those markets. Okay, because it's just there's just a different level of patience. And the US stock exchange. The other issue is if you're on the US stock exchange, there's thousands and thousands of companies who are listed, and you can't get oxygen. Okay? No one's going to give you the time of day. So, and you're basically saying to them, hey, by the way, yeah, we're Property Guru. We're in Singapore. I know we're listed on the NASDAQ, but we're in Singapore. You know that place off the bottom of Asia somewhere, right? And ... People are going, yep, this is not the US, or whatever.
Okay. We'll start. I want to ask you one final question. You have to put your hand in the fire a little bit here to give Harvey and I a clip to promote this episode. What do you think? What do you think the next big headline that Harvey and I are going to be writing about Property Guru will be?
I would think there's probably a couple. One will either be the ones that you'll be writing, right? The stuff you won't be writing is the organic, day-to-day, good operational growth. They're not going to be putting out their numbers, so you're not going to get access to those sort of performance stuff and so on. There'll be material things that they do, and they'll fit into either acquisitions or disposals. Okay, would be that. So it would be either people, acquisitions, or disposals. Okay, so people I can't comment because I'm not EQT and I've got no idea. Okay, I think you're probably going to be writing about. You could be writing about Property Guru closes its data and fintech divisions. Could be, or Property Guru acquires a DCG or a Fazwa or someone else to solidify its position in markets, or Property Gurus with like an EMPG. Okay, if you want to have a really ballsy call there, to really scale a business that operates in that whole region. By the way, I'd be super surprised if you got that, because it just doesn't make sense. They are two fundamentally different companies, two fundamentally different management structures, and so on. So I probably wouldn't clip me saying they're going to do MPG, but I do think there's a good chance that you'll see some interesting acquisitions occurring throughout that are Southeast Asian focused in the next 6 to 12 months. They've got to digest what they're currently doing. They've got to close out the transaction that's probably going to take, I think you said, till the beginning of next year, probably for compliance reasons and a whole bunch. Yeah, they've got to delist a company. Sorry, you've got to delist a company on the US stock exchange. Okay, that takes time. Okay, so they've announced it, but there's a whole bunch of procedures. But I think after that, you'll start to see, acquisitions. So I'd say the most likely one will be two. Disposal of some assets, probably get out of fintech and data business, or one of them maybe, because it's losing a lot of money, and that just helps stabilize. And B, an acquisition.
Okay, and we'll keep our minds open to who that might be. All right, I think we'll leave it there, gents. We don't know what we don't know with this, I think.
But if we did know, it would be boring.
Yeah.
We're here to speculate.
Oh, yeah,
right?
no, cool.
And I think at the end of the day, if you take the time to think about logically, and I got a lot of time in the world for EQT, by the way. I think they're very, very good operators. Then they're not going to. They haven't purchased. Big. This is sort of clippable for you. Like EQT would not have purchased PropertyGuru without a lot of deep analysis, a deep thought, and a very strong view on how they can grow the business to become an even more powerful regional player. The only question is how.
All right, and we will be covering it on the pages of online marketplaces over the next however long this sales cycle for private equity ends up being. All right, Harvey, Simon, thank you very much for joining me, and until next time.
Okay.
Thank you. Bye bye.
Bye bye.